Hey guys, welcome to another episode. On this video, I'll be showing you my M1 Finance August 2020 portfolio review and update. Hey guys, welcome to my channel. If you're new here, I'm Romel, and on this channel we talk about all things related to personal finance, investing, and building wealth. We discuss mindsets, strategies, techniques, and resources to help you in your journey to build wealth. If you haven't yet, please subscribe. We produce new content every week. Alright, so for those of you that are new, I do an M1 Finance monthly update to show you guys what stocks I'm investing in and how I've been doing. This month, we'll be showing you the August 2020 update and show you how the stocks I've picked and have picked are doing, as well as some of the dividends that I've received. Hey guys, so you can see here that my current portfolio value is $2,021.53. Of that, I'm seeing a performance increase, or positive performance or market gain of $294.51. That's about a 37% increase in my value just from investing. If I sort the total gains of all my stocks from highest to lowest, you'll see that the Berkshire Hathaway Expert Pie is up 44%. That's a total dollar value increase of around $152. Obviously, this is one of the biggest slices in my pie, so we're seeing the biggest increase in monetary value as such. The second biggest increase I have is Tesla. This is only 2% of my pie. You can see that I'm up 283%. Obviously, there's been a lot of news with Tesla, especially with their recent stock split, so it's no surprise that Tesla is doing great. I know that a lot of the people that are looking into Tesla are, saying that there is going to be a market correction. So, maybe at the end of September, there'll be a little bit of a pullback in performance, but I'm a long-term investor and, I'm happy with how Tesla is doing in my portfolio. The next stock I have here, or slice, is my Dividend Aristocrats Pie. You could see that it's up almost 11%, and the market, the dollar value increase is almost $28. So I'm seeing some great returns, and Dividend Aristocrats are companies that issue dividends. Next one I have is my VTI, Vanguard Total Stock Market ETF. That's up almost 31%, with a total increase dollar value of around $27. The next company I have here is Shopify. That's seeing a great return at 105% increase. All right, and then the last three slices of my pie I have are my Vanguard High Dividend Yield ETF, which is showing a 12% return, my 5G stocks, which is showing an 11% return, and my realty income, which is showing a almost 23% return. If we actually go into the stats of my portfolio account balance, you'll see that the net cash flow is $1,733.84. The market gain is $287.69. One thing you have to see with the total gain is that the total gain is comprised of two things. One is market gain, which is the increase of your stocks based on how it's performing in the market, and the second one is earned dividends. So that's passive income that you get for investing in certain companies. The earned dividends I have is $6.82, and that's from doing nothing. I made $6.82 just by investing. So both the current value and total gain makes my total return 37%. I'm happy with how it's doing. M1 Finance is very much a set it and forget it type of portfolio. I've been contemplating rearranging the pies, or the slices in my pie, to maybe do more of a stock-based pie, so that some of the larger slices are individual companies and not ETFs. But one thing that you could see with this is that VTI is outperforming some of the individual stocks. So, for example, if we go into the Berkshire Hathaway slice, if we sort it by total gain, Apple obviously is doing really well. That's showing a 112% increase. That's another company that's doing a stock split. There's been so much news about Apple and Tesla that I'm sure everyone knows by this point that both of them are doing stock splits. Bank of America is showing a 15% return. American Express is showing a 22% return. Coca-Cola is showing a 12% return. Heinz is showing a 16% return. Moody's is showing a 23% return. Amazon is showing a 44% return. JP Morgan Chase is showing basically a 12% return. MasterCard is showing a 43% return. Same thing with General Motors. DaVita is showing a 15% return. Chartered Communications is showing a 26% return. US Bancorp is showing a 8% return. Costco is showing 26% return. Visa is showing also 25% return. VeriSign is showing 15% return. Bank of New York Mellon is showing a 7% return. Liberty Media Corp is showing 9% return, and Wells Fargo is showing a negative 10% return. One of the things this illustrates is that the VTI Total Stock Market Index is outperforming a lot of the individual stocks. That's because VTI invests in all the stocks in the market. So just because one stock is going down doesn't mean that the value of VTI is necessarily going to follow suit. Because it's investing in all of the companies, it helps to minimize the volatility you see, in the average performance. So if you're looking to start investing, I always say that ETFs are a great way to diversify yourself into many companies and also, reap some of the benefits that these individual companies see when, there's news on them. If we go into my Dividend Aristocrats, you see a lot of these companies are showing a lot of great returns as well. All of the companies are up. I'm just trying to scan and see if there are any companies in the negative, and looks like everything is positive right now. Well, here we go. Here's some red stocks. All right, so Chubb is showing a negative 0.18%. AbbVie is showing a negative 2%. AT&T is showing basically negative 3%. ADP is showing negative 4%. Becton Dickinson & Co. is showing a negative 8%. Con Ed is also showing negative 8%. Walgreens is showing a negative 18%. Chevron is showing a negative 9%. Same thing with People's United Financial. Cardinal Health is showing negative 12%. And ExxonMobil is showing a negative 14%. So I do have a lot of companies that are in the green, meaning that they are showing positive returns. But I have a small handful that are also performing negatively. The thing to note is that because I have so many companies in my portfolio, my overall performance is positive. And that's one, quick key or lesson that you should take. If you're looking to diversify yourself and to help mitigate risk, then having a lot of companies or having an ETF that invests in multiple companies is a great way to do that. If I had just invested, 50% of my portfolio in ExxonMobil, then my portfolio would probably be in the red right now because Exxon is right now currently negative 14% in terms of market performance. If we go into 5G stocks, Nvidia is up almost 60%. Qualcomm is up 47%. Marvell Technology is up 22%. Corning is up 22%. Ericsson is up 21%. Skyworks Solutions is up 16%. XLNX is up 12%. 5G, which is a 5G ETF, and this is it's almost like a redundant stock because investing in the 5G ETF already has most of these companies in there, but I want to do it anyway because, this This 5G stocks portfolio only has, I don't know, I'd say like 20, whereas the 5G ETF has a lot more companies in its portfolio. Ciena's up 9%. Maycom Technology Solutions is up 8%. Nokia is up 7%. Applied Materials is up 4%. SBA Communications is up 3%. China Mobile is up 2%. Keysight Technologies is up 2%. Resonant is up 2%. And here are some of the companies we have in the red. So we have VOV Solutions is down 0.87%. Crown Castle is down negative 3.73%. American Tower is down negative 4%, and Micron Technology is also down negative 8%. All right, guys, that's an overview of my portfolio. I'm pretty happy with the way it's going right now. You can see that I have been consistently investing money into that portfolio, and so as the months go by, you'll see that the value is increasing. It's up almost, I think it was $250, which is great. I didn't have to do anything. I made money. I had dividends that I received just from investing into companies. M1 Finance is a great way to set it and forget it. I always say this for people that aren't looking to do day trading or, some of the super sexy techniques that you'll see a lot of YouTubers talk about. For someone that just wants to pick a few companies and invest, M1 Finance is the way to go because it's very easy, very, I guess, hands-off in a sense. That's after you pick your companies that you want in your portfolio. All you got to do is contribute money. It'll make the trades for you and just watch your portfolio either, ride the market. It could increase, it could decrease. Some key takeaways is try to diversify yourself in different companies that are in different sectors or in ETFs that are in different sectors. So that way you don't see that much volatility. That's all I have for this video. Hope you guys enjoyed. If you haven't yet, please like, comment, and subscribe. We're a new and growing YouTube channel, and anything you can do to support us is greatly appreciated. If you want to connect with me on other social media platforms such as Facebook, Instagram, or Twitter, I'll leave links in the description down below as well. Feel free to reach out to me. I love all the comments and engagement. Alright guys, thanks for watching. I really appreciate your time, and I'll see you on the next one.